He is toying with the biggest tax cut of all, no income taxes.
I think tariffs are the most beautiful word. I think they're beautiful. It's going to make us rich.
Did you just float out the idea of getting rid of income taxes and replacing it with tariffs?
Well, okay.
Were you serious about that?
Yeah, sure, but why not?
This would be the biggest transfer of wealth in the history of this country.
Can you guarantee American families won't pay more?
Imagine a world where you wake up on payday and there's no deduction for income tax. Yes, you heard that right. No more income taxes. That's the vision former President Donald Trump proposed with his 10% tariff plan. It's a concept that has sparked both intrigue and controversy. But what is this plan really about, and how would it work? Could it revolutionize how the US collects revenue, or is it just a pipe dream? In this video, we'll break down the 10% Trump tariff proposal, explore its implications, and discuss what it could mean for you, your wallet, and the economy. Get ready to dive deep into one of the most debated economic policies in recent memory. Let's get started. What is the 10% Trump tariff? First, let's define the basics. The 10% Trump tariff is a proposal to eliminate federal income taxes for individuals and corporations and replace them with a flat 10% tariff on all imported goods. In essence, instead of taxing your earnings, the government would generate revenue by taxing what comes into the country. This means that every product imported into the US, whether it's a car from Germany, electronics from China, or wine from France, would carry an extra 10% fee. The idea is to simplify the tax system while encouraging domestic production and creating jobs. But how realistic is this approach? Let's unpack it. Why replace income? Taxes? Trump's proposal stems from long-standing frustrations with the complexity and perceived unfairness of the US tax code. According to proponents, income taxes discourage hard work and productivity by taking a chunk of your earnings before you even see them. Additionally, the corporate tax system has been criticized for encouraging companies to move profits and operations overseas to avoid high tax rates. The Trump tariff aims to address these issues by simplifying the tax system. No more tax brackets, deductions, or loopholes. Encouraging domestic manufacturing. Imported goods become more expensive, potentially making American-made products more competitive. Attracting global businesses. By eliminating corporate income taxes, the US could become a haven for multinational corporations. But like any major shift, this proposal comes with trade-offs. Let's look at the potential benefits and drawbacks. The benefits of the 10% tariff system. 1. Simplification of the tax code. Imagine no longer needing to file income taxes. For individuals, this means less stress and fewer administrative burdens. For businesses, it eliminates the need for costly tax consultants and legal teams. 2. Boost to domestic manufacturing. By imposing a 10% tariff on imports, foreign goods become more expensive. This could incentivize companies to manufacture products within the US, creating jobs and boosting local economies. 3. Economic growth. Eliminating corporate income taxes could attract businesses from around the world. More companies setting up shop in the US means more jobs, higher wages, and increased economic activity. 4. Revenue generation supporters argue that the US imports enough goods to generate substantial revenue through a 10% tariff. In theory, this could offset the loss of income tax revenue. The drawbacks and criticisms. While the idea sounds appealing, critics have raised several concerns. 1. Higher consumer prices. Tariffs on imports often lead to higher prices for consumers. For example, if a smartphone imported from Asia costs $1,000, a 10% tariff would increase its price to $1,100. Everyday goods like clothing, electronics, and even food could become more expensive. 2. Impact on low-income households. Higher prices disproportionately affect low-income families, who spend a larger portion of their income on necessities. Critics argue that this system could increase economic inequality. 3. Trade wars and retaliation. Imposing tariffs could trigger retaliatory measures from other countries, leading to trade wars. This could hurt American exporters and destabilize global trade relationships. Revenue uncertainty. Would a 10% tariff generate enough revenue to replace income taxes? Some economists are skeptical, noting that it's difficult to predict consumer behavior and the volume of imports. Historical and global context. Tariffs were a primary source of government revenue in the US before the introduction of income taxes in 1913. However, the economy and global trade landscape have changed dramatically since then. Globally, other countries have experimented with reducing income taxes and relying on consumption-based taxes like value-added tax, VAT, or tariffs. These examples provide both inspiration and cautionary tales for the US. What would this mean for you? Under the 10% Trump tariff system, your paycheck would no longer be reduced by federal income taxes. However, the prices of imported goods could rise. Here's how it might impact different groups. Middle-class families. They might save money on taxes, but face higher costs for everyday goods. Low-income households. They could struggle with rising prices unless offset by other measures, such as subsidies. Businesses. Companies that rely on imports might see increased costs, potentially passing them on to consumers. Is it feasible? Economists are divided on whether the 10% tariff system could work. The feasibility depends on factors like the volume of imports and their tariff revenue potential, consumer behavior and willingness to pay higher prices, the global trade environment and potential retaliatory measures, the ability of domestic industries to scale up and meet demand. While the proposal has bold aspirations, implementing it would require significant political will and careful planning. The bigger picture. The 10% Trump tariff is more than just a tax plan. It's a vision for reshaping the US economy. Whether you see it as a bold move toward economic independence or a risky gamble, it raises important questions about how we fund our government and what kind of future we want for our economy. As we continue to debate policies like these, it's essential to stay informed and consider the perspectives of all stakeholders. After all, the decisions we make today will shape the country we leave for future generations. Conclusion. So, what do you think? Could the 10% Trump tariff be the solution to simplifying our tax system and boosting the economy? Or is it too risky for consumers and businesses? Let us know your thoughts in the comments below. Thanks for watching, and don't forget to like, share, and subscribe for more deep dives into policies that impact your life. See you in the next video.